Good morning, afternoon or evening, ladies and gentlemen, Allincrypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily market update on this magnificent Monday. I hope you're all having a happy one, and I hope you're all prepared for what is going to be quite likely a very volatile week on the back end of the events that are taking place this week. We are going to be covering that and preparing you guys for what this week has in store for us. From an economic data point of view, for us in the UK, we have the budget coming out. We also have NonFarm Payroll. And last NonFarm Payroll number was really the start of a very strong dollar. And remember, in regards to our macro reason for being long on the markets, it's largely centered around global liquidity, which sees when it increases, assets do well, which is inversely correlated with dollar strength for the most part. We're going to leave that aside. For those of you that are considering becoming a Patreon, if you do take that plunge today, first thing you've got to do is go and check out last night's meeting. We really overlay the macro economic picture with the cryptocurrency space, which is quite micro but very important. So what we're going to be doing in this video largely is preparing you for the week ahead. I'm going to be giving you my take on how all this volatility is likely going to play out. And I think it's actually going to play out to the upside. And why do I believe that? Well, we're going to be looking at not just Bitcoin, but some stocks out there. Because the data that we're going to get this week is going to affect everything. And crypto is going to be hypersensitive to it as a higher beta risk asset. Which, is it that more broadly? Perhaps not. BlackRock certainly made that argument. But certainly at the moment, it very much moves with the risk markets. On a day-to-day, it's certainly affected by them, I should say, probably more so than moves with. But there's a lot of sort of big data that's likely going to affect things. And on top of everything happening this week, I believe next week, is it Tuesday next week? We're going to find out who the next president of the United States is. This could also explain the kind of stalling with the crypto markets, because markets don't like uncertainty, and they probably want to see what's going to take place. So we will be looking at that. We'll be talking about, of course, CoinShares' digital asset product inflow, digital asset fund inflows, and then we'll be wrapping the video up. But where I want to start first, guys, bit of an interesting one to kick the video off, is with a divine sign sent to us prophesying the collapse of the US dollar as the world reserve currency. Let's dive into this, ladies and gentlemen. Here we have Yellen talking when a mysterious sign befell her around a very important question. Let's dive into this.
Thank you, Colby Smith with the FT. You've described calls for widespread tariffs as deeply misguided, and the IMF today has warned that such policies will dent global growth. Can you elaborate more on the near-term economic impact of these policies and over a longer time horizon? How concerned are you about the potential impact of the dollar's status as the world's reserve currency?
Let's see.
Is it a sign? It could be. And I think this, we're kind of trolling a little bit here, very timely, or joking, I should say, a little bit here. Very timely, that the dropping of the sign on that question. I do believe that money is going to change. I think it's a very exciting time to be alive. Certainly a very exciting time to be interested in the cryptocurrency space. We are looking at dollar weakness. I think, interestingly for me, when I look at perhaps monetary metals like gold and silver, I'm seeing some very interesting things. Certainly silver potentially going to $300+. What's the context of that getting to where it could go to? For another video entirely, let's, as promised, guys, get you guys prepared for what's going to be a very volatile week. On Wednesday, we have Britain's Labour government to deliver a debut budget this week, settling weeks of uncertainty. Now, they have, and this report highlights it, Labour has repeatedly ruled out increase to income tax, national insurance, social security payments, value-added tax, a sales levy, and corporation tax. Changes to employer taxes, inheritance taxes, capital gain taxes, and a freeze on personal income tax thresholds remain on the table. UK Financial Minister Rachel Reeves will deliver The government's hotly awaited debuted budget on Wednesday, putting to bed weeks of uncertainty over potential tax hikes and spending cuts. We shall see. I think capital gains is definitely on the table. Like I say, personally, I'm in this situation where I'm able to leave the UK. Depending on how this comes out, we will be making that step. And we did look at the back end of last week at Keir Starmer's take on what constitutes working class, or what constitutes the people he's in government for. And he essentially said people that don't have any savings. And I'm sure there's many working class or hardworking people out there that have very honest and modest jobs that have put some money aside. He's not there for you. He's there for the people that they want, enslaved, living month to month with no sort of a financial safety net. That's who he's there to serve, not you guys that have perhaps worked very hard and saved your money, or even have a house, for example. Inheritance tax likely on the table, capital gains tax, employer tax. I employ people, they'll just incentivize us to not do that, and a freeze on personal income. So we'll see. This is likely going to affect the dollar markets more broadly, or certainly the Great British Pound market and the dollar. It's interesting because I'm looking for upside on the British Pound, and it could come on the back end of tax hikes. I don't believe that taxing people more money actually generates more tax revenue. I don't think there's been any kind of, or certainly closes the deficit. I don't think there's been any statistics to back that up. But this is happening this week. This is a global event. Certainly in the UK, this is very interesting. We shall see what this brings. As if that wasn't enough this week, we also have, starting on the 28th of October, which is today, going to the Friday, the 1st of November, we also have a hell of a lot of company earnings. In fact, some of the largest companies like Alphabet, Snapchat, Snap, PayPal, McDonald's. We've got Microsoft, MicroStrategy, Starbucks on Wednesday. We've got a hell of a lot. Apple, Amazon, Intel Corp, Chevron, ExxonMobil, Coinbase, Booking.com. It's going to be Visa, Ford, a very interesting week for the markets indeed. And I'll give my take on all of this, because I think technically, and why we're technical analysts is because we really like to look at the charts and quieten everything down. On top of all of this, so the UK budget, a lot of company earnings coming out this week. We also have on Friday, and let's just get to Friday, the 1st of November, and it's always the first Friday of every month you get NonFarm Payroll, which is a key US statistic in regards to the labour markets. So you can see we have NonFarm Payroll here. The forecast is obviously a lot lower than last one, which came out a massive bit. I wouldn't be surprised if this one does. And unemployment set to basically stay the same, which is good. And then you've got likes of ISM manufacturing, PMIs expected to rise, and ISM manufacturing prices, and so on and so forth. So it's going to be interesting. You've also got core PCEs at some point. Is that on Thursday? Yep. Heavy week of data, guys. What do I... and then this is all followed by what's going to essentially take place next, or a week and a day from today, which is the presidential election. How do I think the markets are going to do despite this? Well, we have looked at and very much have proceeded in the manner that we expected for the S&P. So we have a target for the S&P that we gave down in the 5.5 range, the 5,500 range, of it getting to 6,252. So we expect, just like we looked at expecting upside for the markets and positivity on the back end of the FOMC, the S&P looks primed for upside. Very interesting, given we're certainly in a target or a pattern that has triggered that takes it to the upside. Very interesting, given the kind of company earnings that we have this week. When we look at the US 100, a very similar story. When we look at the likes of Nvidia, again, very similar story. Tesla had their earnings last week, and this has nasty gap there, triggered what we believe is a larger pattern that sees it run to 505, and then there might be a broader pattern that takes it to about $900. Let us look at the likes of some of the companies that you also have, like Microsoft. which I think, again, is likely going to set up an upside continuation pattern that could see it potentially run into the sort of high or mid 500 range or low 500 range. You've got Google, not really getting anything from Google. This is, in my opinion, a bit of a head and shoulder. I think the markets on the back end of this are actually going to do quite well, given how they're sort of technically positioned, whether that's the S&P 500, whether that's the US 100, whether that's Google, whether that's Microsoft. You know, we could see sort of some sort of pattern here. I think it's very obvious. So this is the power of being a technical analyst. You essentially can quieten down the noise that is sort of thrust upon you by economic events and the uncertainty that comes on the back end of it. To a degree, you know, when it walks, talks, and quacks like a duck, we don't need the fib there, it's a duck. And we ultimately can see the markets doing quite well on the back end of earnings. Interestingly, I do think the Great British Pound is going to do well against the dollar despite this bill. And if you look at what the Great British Pound did on Rachel Reeves's bill, which was very much the opposite of this, it very much took a downturn. So we still got upside for the dollar. And then, of course, non-farm payroll, you know, we do have that broader plan for the dollar to see downside, albeit being exceptionally strong, spurred on by the last non-farm payroll. So I'm not sure if I want the number to come down. And then, of course, we've got elections coming up next week. Crypto, we didn't speak about on the short term. We do have that pattern that sees Bitcoin proceed to about 85K. Or 84K. We're also on the cusp of breaking out on this bull flag that is just a pullback in regards to the broader trend that you are in. We've looked at totals that all seem to be breaking out of their bull flags. This leads me to believe that more broadly, not only do we have those short-term patterns that are very relevant to this week, but more broadly, when we look at crypto, we've got those patterns that see real continuation. And that actually leads me to believe there's going to be a real sort of spur for the markets overcoming the elections and overcoming this week. You know, there's going to be, even though it's a volatile week, I'm very positive on my sort of outlook of it. So a hell of a lot going on. It's obviously the total market cap, total 2, total 3, others, I think they all look great. You know, Bitcoin's market cap as well looks good to me. We don't want market cap. We want Bitcoin's market cap. I think this looks great. I think Bitcoin's going to do very well over the remainder of this year, and the markets more broadly. And of course, relevant to what's taking place this week with the budget on Wednesday, a lot of company earnings, some of the largest companies in the world earnings. We're bullish on the S&P. I'm actually bullish on the Great British Pound, even though I think, which is crazy, even though I think this budget is going to be detrimental, and I think Labour is a horrific. Let's be careful here, all in. You know, I don't think they're very good. I'll just say that. We also have the likes of non-farm payroll, so heavy economic data, and that's all going into on Tuesday, finding out who the next president is going to be in the United States. So we shall see. A lot going on. Ultimate take based on what the chart's saying is actually there's going to be a positive reaction to it, albeit perhaps a volatile one, and volatile fertility can work to both the up and the downside. What I want to do to sort of close things off, guys, now that we've prepared people for the week ahead, is talk about what we like to talk about every Monday, which is CoinShares Digital Asset Fund Flows Weekly. Again, we saw flows once more totaling just shy of $1 billion, 901 million. This was, of course, led by Bitcoin. Ethereum, actually, the interesting thing with this inflows that we've seen this past month pushes our year-to-date inflows to triple what we saw in 2021, which was the raging bull market. And I think that explains why Bitcoin put in a high pre-halving. Obviously, Bitcoin led, or the US led. And we also saw Ethereum continue to see outflows on that grayscale sort of conversion. Solana and blockchain equities saw gains. And Solana, very interestingly, actually saw the most inflows barring Bitcoin. So it beat Ethereum. We're also very bullish on Sol. Have I got a Sol chart here on the meeting? I think I do. Yes. You know, and Sol's very much likely. This is very much MicroStrategy-esque. You know, we've got that $2,000 target for Sol. I do actually hold Sol to be totally transparent. But we shall see what sort of comes of it. Just interesting, you know, throughout this whole pullback that we've seen for Bitcoin, we've seen continued accumulation throughout this. We've seen exchange reserves get drained. We've seen inflows in regards to Bitcoin ETFs. And we've also seen whale wallets accumulate like never before. And on the back end of Sol also, very interestingly, Solana hits the highest weekly real economic value activity in history, which of course is very interesting. So we are bullish on Sol, bullish on a lot of the space. We think you've just got to sort of ride the volatility that is inherent with this space, and you shall be rewarded at the other side. But this is going to be a very volatile week. Our ultimate take based on technically how the likes of the US stock market is positioned, the crypto market is positioned, is actually all of this economic data and volatility is going to result in upside, and actually the presidential election is likely going to do the same thing, which leads me to believe that the markets are positioned for a Trump victory. Just my take. Don't hate me. That's it from me, ladies and gentlemen. Have a magic Monday, and I'll see you all in the next one. Thanks for watching, guys. See you in the next.